If you are living in the United States right now as an immigrant, whether you came here legally on a visa, whether you are waiting for your green card, whether you are undocumented, seeking asylum, protected under TPS, or simply trying to build a stable future for your family, there is something happening quietly inside the American banking system that you need to understand immediately. Most people have heard rumors about bank accounts being monitored, cash deposits being reported, or federal agencies tracking financial activity, but very few people actually understand how the system works, what the real laws are, what is true, what is exaggerated online, and most importantly, what actions could unintentionally put someone at risk. Today, we are going to break all of it down carefully, calmly, and clearly, because in 2026, financial awareness is no longer optional for immigrant families. It is essential. Over the last year, immigrant communities across the United States have been flooded with fear, confusion, and misinformation. Social media posts claim that withdrawing your own money can trigger immigration investigations. Some videos say banks automatically report immigrants to ICE. Others claim that using cash is illegal, or that anyone depositing more than a few $1,000s will immediately be flagged by the government. The reality is more complicated than that. Some of these fears are exaggerated, but some of the underlying concerns are based on very real laws that have existed in America for decades. And because immigration enforcement has intensified dramatically in 2026, understanding these rules has become more important than ever before. To understand where all of this started, we need to go back more than 50 years. In 1970, the United States government passed a major law called the Bank Secrecy Act. This law became one of the most important financial surveillance laws in American history. The purpose of the Bank Secrecy Act was not immigration enforcement. It was originally designed to help federal authorities fight organized crime, money laundering, drug trafficking, tax evasion, terrorism financing, and large-scale financial fraud. Congress realized that criminal organizations often moved large amounts of cash through banks, and they wanted a system that forced financial institutions to report suspicious financial activity to the federal government. That law created a reporting system that still exists today. Every bank in America, whether it is a major national bank or a small local credit union, must follow these rules. The law requires banks to monitor certain transactions, collect identifying information from customers, and file reports when certain thresholds or suspicious patterns appear. Most Americans never think about these rules because they happen quietly in the background. But for immigrants living under an increasingly aggressive enforcement environment, these systems can suddenly feel very personal. The first number everyone needs to understand is $10,000. Under federal law, if a person conducts cash transactions exceeding $10,000 in a single business day, the bank must file a currency transaction report, often called a CTR. This applies to deposits, withdrawals, currency exchanges, loan payments, or almost any movement of physical cash. If you deposit $11,000 in cash into your account, the bank files the report automatically. It does not matter whether the money is legal income or illegal income. The report is required by law. The bank employee does not choose whether to file it. The computer system triggers it automatically. Many immigrants panic when they hear this. They think filing a report means they're being accused of a crime. That is not true. Millions of currency transaction reports are filed every single year involving ordinary people and completely legal money. Restaurant owners, construction workers, convenience store operators, taxi drivers, and many cash-based businesses regularly trigger CTR filings simply because they handle large amounts of legitimate cash. A currency transaction report alone does not mean you are under investigation. But now we come to the part that creates the most confusion, the $3,000 threshold. Very few people understand this rule correctly. Under federal banking regulations, if you use cash to purchase certain financial instruments like cashier's checks, money orders, or traveler's checks in amounts between $3,000 and $10,000, the bank must verify your identity and keep records of the transaction. They may request identification, record your personal details, and store the information in compliance databases. These records may later become accessible to federal investigators if law enforcement agencies legally request them. Then there's another layer entirely, and this is where things become more serious. Banks are not limited to reporting only large cash transactions. They are also legally required to file suspicious activity reports known as SARs whenever they believe financial behavior appears suspicious, even if the amount is very small. There is no minimum threshold for a SAR. A suspicious pattern can trigger one. Unusual behavior can trigger one. Multiple cash deposits over time can trigger one. Sudden changes in financial activity can trigger one. Even behavior that simply appears inconsistent with a customer's history can trigger additional scrutiny. What makes SARs especially important is that they are confidential. Your bank is legally forbidden from telling you that a suspicious activity report has been filed about your account. You may never know it happened. The report goes directly to the Financial Crimes Enforcement Network, commonly called FinCEN, which operates under the United States Treasury Department. Now let us connect this directly to immigration enforcement in 2026, because this is where things have changed significantly. Under the current administration, immigration enforcement agencies have expanded cooperation and data sharing with multiple federal departments. Homeland Security Investigations, known as HSI, which operates under ICE and DHS, has access to financial intelligence under specific legal procedures. Financial information can become relevant during criminal investigations, immigration fraud investigations, human trafficking cases, tax cases, or broader federal enforcement operations. This does not mean ICE agents are sitting inside your bank monitoring every immigrant account. That is not how the system works. But it does mean that financial activity can intersect with immigration enforcement under certain circumstances, especially when suspicious financial behavior or criminal investigations are involved. And because of increased enforcement priorities in 2026, many immigrant communities are understandably anxious about how financial data could affect immigration cases. One of the biggest mistakes people make is trying too hard to avoid triggering bank reports. This leads directly into one of the most dangerous legal concepts in American banking law, structuring. Structuring happens when someone intentionally breaks large cash transactions into smaller amounts, specifically to avoid the $10,000 reporting threshold. Many people think this is smart. In reality, it can become a federal crime even when the money itself is completely legal. Imagine someone has $15,000 saved from years of construction work. Instead of depositing the full amount into the bank, they split it into smaller deposits of $4,000 over several days because they heard rumors that deposits over $10,000 alert the government. That behavior itself can trigger suspicion because banks are trained to detect exactly those kinds of patterns. Federal law focuses heavily on intent. If authorities believe someone intentionally structured transactions to avoid reporting requirements, that alone can create serious legal consequences. For immigrants, this becomes even more serious because criminal financial allegations can affect immigration proceedings. If someone is applying for a green card, naturalization, asylum, cancellation of removal, or adjustment of status, any criminal investigation or criminal conviction connected to financial activity can create complications. Immigration law often considers issues involving fraud, dishonesty, or criminal intent very seriously. This is why understanding the rules is so important. If your money is legitimate, the safest thing is usually transparency, not avoidance. Let the bank file the required report, keep documentation showing where your money came from, save pay stubs, invoices, tax records, business receipts, contracts, or proof of employment. Good documentation is one of the strongest protections you can have. Another area many immigrant families worry about is sending money back home. Remittances are a normal part of life for millions of immigrants in America. Parents support children overseas, sons and daughters help elderly parents. Families send emergency support during crises. None of that is illegal, but how you send the money matters. Using licensed money transfer companies or regulated bank wire services is far safer than informal cash transfer methods operating outside the regulated banking system. Always keep receipts and records of your transfers. There's also a growing fear among undocumented immigrants about opening bank accounts at all. Some people are now choosing to keep large amounts of cash at home because they fear government monitoring. Financial experts consistently warn against this approach. Operating entirely outside the banking system can create even greater risks, including theft, inability to build financial history, and lack of documentation showing legitimate income patterns. Using a regulated bank account responsibly is generally far safer than operating completely in cash. Let us also address one major misconception directly. Simply depositing money into your account does not automatically trigger immigration enforcement. Simply withdrawing money from an ATM does not place someone onto an ICE watch list. Ordinary banking activity by itself is not illegal. The banking system was primarily designed to identify serious financial crimes, not to target hardworking immigrants conducting ordinary financial transactions. At the same time, the reality is that the intersection between financial monitoring and immigration enforcement has expanded. Data sharing between federal agencies is broader than it was years ago. Enforcement priorities are more aggressive than they were previously. This is why immigrants need to understand the system rather than rely on rumors circulating online. Fear without knowledge creates mistakes. Information creates protection. If you are currently involved in an immigration case, there are practical steps you can take today. Keep organized records of your financial history. File taxes whenever possible. Avoid unusual cash patterns that may appear suspicious. Never intentionally structure transactions. Use licensed financial services. And if you ever receive communication from federal authorities regarding financial activity, consult an immigration attorney immediately before answering questions or signing documents. There are also many immigrants who run small businesses using mostly cash. Restaurants, grocery stores, landscaping companies, nail salons, food trucks, construction crews, cleaning businesses, and small retail operations often handle large amounts of cash legitimately. If that describes your situation, proper bookkeeping becomes absolutely essential. Maintain accurate business records, separate personal and business finances, deposit business income consistently and honestly. The stronger your documentation, the better protected you are if questions ever arise. What we are really talking about today is financial transparency and legal awareness. The banking system in America is heavily monitored, but it is also heavily regulated. Most people who use banks legally and honestly never experience serious problems. The greatest danger often comes not from the reporting system itself, but from misunderstanding the system and accidentally engaging in behavior that appears deceptive. And that brings us to the most important message of this entire conversation. Knowledge is protection. Rumors spread fear. Facts create clarity. Immigrant families already face enough stress navigating visas, immigration interviews, work permits, green cards, asylum applications, and legal uncertainty. Financial confusion should not become another burden. The more you understand these systems, the more confidently you can move through them. As we close today, remember this carefully. The laws we discussed are real. The reporting thresholds are real. The relationship between financial investigations and immigration enforcement is real. But that does not mean ordinary banking activity should terrify you. Millions of immigrants across the United States use banks safely every day. The key is understanding the rules, avoiding illegal structuring behavior, keeping strong documentation, and seeking qualified legal guidance when needed. Immigration policies and financial enforcement priorities can change quickly. Always verify information through official government sources including FinCEN, Gov, IRS, Gov, DHS, Gov, and USCIS, Gov. And for your personal situation, especially if you are facing immigration complications or financial investigations, speak with a licensed immigration attorney as soon as possible. If this video helped you understand something important today, make sure you like this video, subscribe to the channel, and share it with someone who needs this information. There are millions of people in immigrant communities right now searching for clear answers, and together we can help more families stay informed, stay protected, and avoid costly mistakes. Stay safe, stay smart, and take care of yourself and the people you love.